asking within camp, so I'll continue. Okay, so strong structures are structures that were able to break structures. Strong structures are structures that were able to break structures. And before everything, the note stated that a structure or structure in the market are highs and lows. Simple. That's the simplest. That's the simplest definition that we can give it to structure. Highs and lows. Highs and lows. So strong structures, strong highs and lows are highs and lows that we're able to break highs and lows. If that's how we are going to think about it, that's how we should see it. Strong structures, yes, strong structures are structures that we're able to break structures. So in a bearish market structure, the lows are weak. In a bearish market structure, the lows are weak. We've already gone through what a bearish market structure is, what a bullish market structure is. I've touched on swing, fractal, and internal a little bit, at least, yes, a teaser into it. I've touched on premium and discount pricing. So I think now what I'm going to do, or from the notes, is it is going to be layered. It is going to be layered on top of the other, and I'm going to use the chart to explain whatever I mean. So we have strong structures. So strong structures are expected. No, in a bullish market structure, the highs are weak. So here's a bullish market structure, because we've already gone through what a bullish market structure is. We said bullish market structures are a series of higher highs and higher lows. And I said they are higher highs and higher lows because price created a high, right? But this high is higher than the previous high in bullish market structure. So price created this high. But this high, although these two are all highs, this high is higher than this high. We have this low here, and price created another low after we created this high. So although these two are all lows, but this low is higher than this low, that's why we call it higher low, and that's why we call this higher high, because it is higher than the previous high. So in the bullish market structure, the note is saying the highs are weak. The highs are weak. Why is the highs weak? Why is this high a weak high? Why is the high a weak high? It is a weak high because in this bullish market structure, we expect this, or in market structure, we say a weak structures are structures that failed. We have already touched on that. We said weak structures are structures that failed to do its job. Strong structures are structures that break a structure, or that broke structures. Weak structures are structures that failed to break structure. So here you can see, here is a strong structure. Why? Because you can see it. We can see that it broke this structure, right? Here we can see this structure is a weak structure. Why? Because it failed to break this structure, or it failed to break this structure. So if price, here we can see here is a weak structure, here is a strong structure. Why? Because after this structure formed, you can see price came to the lows, and then we broke below the lows. Again, if we are looking at it from the structure point of view, then we can see this. We can see that here is the strong structure, here is the weak structure. Why? Because this one broke a structure, this one hasn't break any strong structure. If the moment we break this structure, we can deem here to be a swing break of structure, but you know that we haven't gotten to that part yet. I'm just explaining the strong structures and the weak structures. So when we get this break of structure, when we get this structure forming here, we have a strong structure. We can say here is a strong structure from market structure perspective. Here being the internal structure, then you can say yes, this low is a strong low. Why? Because it broke the structure. But from a swing structure perspective, it's having breaking in here BBI. So that's strong structure. So in a bullish market structure, the highs are weak. So here this high, it is weak. Why? Because here is a bullish market structure. But somebody might, as if you have been through the last module of the video that I did, you will be asking yourself, why is this a bullish market structure? Because here is the low, and here is the lower low. Here is the high, and here is the lower low. We have created a high, but this high is lower than this high. So from the market structure point of view, here is supposed to be a lower high, and here is supposed to be a lower low, when we expect price to break this structure to form a lower low, and price to pull back to form a higher low, to form a lower high, and for price to continue to break that low. Because in a bearish market structure, the highs are strong, the lows are weak. In a bullish market structure, the highs are weak, the lows are strong. So swing lows are the lowest points that causes a swing high. Swing high is the highest point that causes a swing low. So we have a swing high here, we have a swing low here. Within here, we had an internal high here, we had a fractal high here. This is the three type structure that I touched on. I'm layering on some of the layers one by one. I don't want to add bunch layers on this concept, and that's why I'm going by the notes, taking it one by one. So now I explained that we have a swing structure, we have an internal structure, and we have a fractal structure. Now I've given you a visual representation of what a swing structure looks like, what a fractal structure looks like, what an internal structure looks like. I'm not going to go deeper now. I'm not going to go any much deeper into that. As I'm following the notes, it will happen. So the highest points and the lowest points, you see, we are dealing with structure, we are dealing with market structure. So that's why we are dealing with the highs and the lows, because what structure is highs and lows in the market. So the highest points of a structure and the lowest points of a structure are the swing structures. The swing, that's the ultimate area. Swing structure is king. So when we look at this bearish market structure, the baby market started free, and where the market started, when the market ended, these are the swing structures. Within the structures, we have maybe price will pull back in some way. We have some kind of pullback because price it is not sustainable for price just continue moving downwards. Definitely there will be some level of, because that the reason is the main reason is from technical point of view. The main reason is we need both supply and demand to make a trade. There can't only be sellers in the market whereby price is only selling, going to no, it doesn't work like that. And we can't only have buyers in the market where price is only going to the upside. No, we need both buyer and a seller on each trade. On each particular candlestick that we see, there were buyers and sellers that went in agreement for that trade to happen, right? So at some point, when price is in impulsive structure, we will have a corrective pullbacks in it. When price is in pullback phase, we will have corrective structures in it. It's just the fractal nature of the market. But that's the reason why we have this highs, we have this swing fractal and the internal to distinguish between the significance of the structures, right? So a swing low, a swing high is the structure that causes this swing low, not this, but the highs. So when, let's say, looking at this structure, price continue and price breaks this structure and we continue to the upside like this, right? You can see that here becomes, although here is a right now here is a strong structure. Why is this a strong structure? It is a strong structure because it was able to break this low. It is as simple as that. Very simple. It was able to break this low. We have here as a low and here as a high. This is a bearish market structure. We have our fractal structures, we have our internal structures, and we have our swing structure. Now the fractal structure was broken. The swing structure was broken. The internal structure was broken, and price is coming to the upside. We expect price to not break this structure. Why? Because it is a strong structure. It is a strong structure. So we expect price to not break this structure, as for price to continue to break the weak structure. Why? Because it is going to fail to break a structure. That's an assumption. But we don't know. Anything is possible in the market. Anything can happen. Each market structure is unique. Although, so let me digress a little bit and bring in some form of psychology or philosophy to explain this, what I've explained right now. So each moment in the market is unique. Each moment in the market, each candle on a 4-hour candle, each 4-hour candlestick is unique. There is no 4-hour candlestick on this price chart that is exactly the same as the main word is exactly. That is exactly the same. It's exactly the same. Never. I don't know. Nothing is impossible. Nothing is impossible. Anything can happen. Everything was there. But the possibility of a movement in the market, repeating itself as the same as some unique, no, bro, it is very slim. Nothing is impossible. I really believe this, but it is very slim. Why? Because looking at this, then it will mean say this candle, how it forming, the people, how everything was like at the moment for this thing to happen has to be the same. From the beginning of me starting the video here, from the last 14 minutes, whatever makasa bibia, if so can say go back, na me can dey make exactly the same. I can never do that. It will never happen. I don't know. Nothing is impossible. Okay, nothing is impossible, but I don't know. The chance of me doing is slim, and I believe each moment in the market is unique, right? So each moment, how this structure has formed can be like my edge. I know, say, when we get this structure, we get a bearish structure that has broken a weak structure to form a lower low. Now it signals that we are in a bearish market structure. After a break of structure, we expect a pullback. I'm starting from maybe I started free noon Namideba. So after a break of structure, we expect a pullback. Price has broken a fractal structure, it has broken internal structure. Now price they pull it back. So we expect this one to form this lower high for price to continue, or for this one to create a strong structure for price to continue, name making this lows for price to continue the bearish market structure. That's why that's why it is a probability game. That's why it's a probability game. So there's a higher probability, say the main concept, say there's a higher probability, although anything can happen and each moment in the market is unique. This structure that has formed on like larger time, or if I'm executing this kind of structures, or if I'm waiting for this structures, this edge to happen, what I know like this to happen in the market consistently, the chance of this playing out in my favor is high. The probability of me winning much than losing is high. So let's see, with the structures that is happening, I've been selling from here, and as I am selling, price came to the lows. I waited for price to pull back, to form a strong structure. Here is the weak structure, and you break it to the lows, because here we had our internal structures, we had our fractal breaks. Here the same thing has happened. So here I made money, and the same thing has happened, right? So here I expect price to go, and even here price has moved in my favor a little bit, and price is pulling back, and price has taken me out. Price can come and take me out here. Price can come pull much into the zone to continue. Anything is possible, anything can happen, but I'm sort of analyzing this to gather and put much of the odds in my favor, So we have these structures here. Yes, I'm not analyzing this, I'm using a note. So strong structures are expected to not get breached, because the moment it gets broken, the trend shift structure. The moment it gets broken, the trend shifts, structure changes. So strong structures are expected to not get breached or broken, because the moment it gets broken, the trend shifts, structure changes. So here's a strong structure. From internal structure perspective, here's a strong structure. From market structure perspective, we have a strong structure here. So here's a strong swing high. So here's a strong swing high. Here's a strong swing, strong internal. Here's a strong internal. So here's the internal structure. This structure, we can classify all of this as a swing, an internal structure, right? So when we get the internal structure, this is an internal break of structure, right? So I'll use this. Now we have two strong structures, so I'll use these two structures to explain what I mean. Strong structures are expected to not get breached, because the moment it gets broken, the trend shift structure or trend changes. So here the internal structure was bearish. So let's say price moved to the low, price pulled back, price continued to the lows. So this another can it's as the best way we can't only have sellers at some point. No matter how impulsive the structure is, there will be corrective moves in it to facilitate the pullback, to facilitate the main move. You need corrective structures for pullbacks, for impulsive to happen. So price will come. So from the market structure perspective, here is an internal structure to the lows. Here is a strong swing structure, right? Fine. Price breaks an internal high. When we get this internal high broken, now here flips from being a strong internal structure to now being a low internal structure, a weak internal structure. Why is this a weak internal structure? This is a weak internal structure because it failed to break a structure. So now, here, as we have this high, we created this low. We expect price to pull back. Remember, after a break of structure, we expect a pullback. So we expect price to pull back and price to continue. Now, when this happens, here becomes a strong structure because it broke this low. Here becomes a weak, it failed to break this structure. Here becomes a strong structure because it broke this low. Here becomes a weak because it fails a strong, and then price will continue. But this is not what is happening here. This is not what is happening here. This is not what is happening here. So when this structure gets broken, it means trend are shifting from bearish to bullish. So the expectation for price to continue bearish, we don't expect this strong structure to get broken. When this swing structure gets broken, it means the swing structure has shifted to bullish. The swing structure shifts to bullish. When it continues, fine. When it don't, means it has shifted bearish. Fractal structures are the tiny little pullbacks in the fractal structures are the tiny little pullbacks in the market, which it's the strong break. So fractal structures are the tiny little pullbacks in the market, in which it gets broken. It signifies the start or end of an internal pullback. What the book is trying to say is that fractal structures are the lowest and the weakest form of structure. When they get broken, they signify the start and end of an internal pullback. Simple. So now we have a swing structure, we have an internal pullback. So you have an internal structure and we have a fractal structure. We have a swing, we have internal, we have fractal. When fractal structure breaks, book say it signals the start or end of internal pullback. So we have this internal pullback. When price breaks this internal structure, it don't signal that this swing pullback is starting. So then we can't deem this to be an enough significant pullback, so that we can't mark this one like from what you. Let me read this. After a swing break of structure, we expect a swing pullback. When the weak structure breaks, we wait for a significant pullback before we mark our swing structure or our swing weak structure. So when the weak structure breaks, we wait for a significant enough pullback. So we know, say, when fractal structure breaks, it signals the start of the internal pullback, but it don't signal the start of the swing pullback, but it is the earliest confirmation that the swing pullback might be happening. So there's some level of trick be here. You need to pay close attention and not how do I say this? So fractal structures, when it happens, say I break it down, it doesn't signal say internal swing structure no bow. A signal say internal structure no either say starting and I say ending. That's the objective. Say internal structure and starting and I say ending. Oh, but when it happen now, and then that's the main way I just say a friend saying the way it happening, the swing structure and happening. So from what this is it is from what this is happening, say you know this swing break of structure. Now say we are expecting this pullback now. When we get to this fractal break of structure, this can be the earliest sign that this swing pullback is happening. So we can get in on the move and start to play this swing pullback. But it only signals the start and end of the internal pullback. So the main objective of the internal structure is to facilitate the swing pullback. The main objective of the internal structure is to facilitate the internal pullback. So what is the internal pullback? Now I'm glad this thing is happening, because now this note, I say everything that I'm explaining is here, is on the chart. I can see it clearly. I'm glad, like it be nice. I'm breaking this market down with my notes. Yeah, it will be nice. Plus I have the chart here. So I'm doing video. I'm recording with OBS on here. I'm reading my notes, and I'm explaining the notes with the charts, and I'm recording myself talking here. I don't know why I am doing this, but I know I'm learning. It is part of the process. This taking the notes was part of the process. Me sitting down and absorbing all this knowledge, watching this content, studying this course, taking notes was part of the process. It wasn't all the process. Time for me to reflect on the notes, to use the chart, to apply what I've learned on the chart. Also parts. Time for me to merge what I know with, look at the gaps, try to merge the meaning, integrate what I can learn to improve and all of that. It is part of the process. I can't skip any part. I can't skip any part, and I'm glad say there's some kind of positive feedback. I'm not. The thing is, sometimes it feels, although say sometimes a day and a bit room, but I don't know why it feels easy work. It feels light work. Like I'm being disciplined, taking notes, learning, but I enjoy it. Like this is what I'm doing. I'm learning. This is an intentional learning, because I have my notes here, reading the notes. Not, I'm digressing a little bit, right? But not digressing much. Taking the notes, analyzing what this thing is saying, right? Everything that is happening here, and I'm getting positive feedbacks because what I'm reading here and what I'm seeing on the chart means the knowledge that I am gathering in this book within myself is good. It's even better because how it is applying on the chart is it's giving me positive feedback. The future looks amazing. The future looks bright, bro. Yeah, so let's continue. The main objective of the internal structure is to facilitate the swing pullback. So now we have this swing high and we have this swing low. We have the fractal structure which signals the end and start of an internal pullback. We have the pullback. So from maybe I'm starting from the last module that says when price breaks a structure, we expect a pullback on that time frame. How do we know that pullback is happening? That's the first one. Two, after a break of a structure, we expect a significant enough pullback for price to we expect enough significant pullback so that price we can mark on our swing structure. So how do we know the pullback is happening? How do we know the pullback is enough, is a significant enough pullback? We continue, but we see now. Let me the book now my raw knowledge. Let me add this my main moment to show you my ability because to show you my ability. So book in say book I'm amending this language to make sense on the chart. Book in say after a break of structure we expect a pullback. So now any one how do we know say this pullback is happening? Because you will never know, anything can happen and each market price action is unique. So we can see say we have three type structures. We have fractal structure, we have internal structure, and we have swing structure. And we are saying say swing structures when they break the weak structure now they become a strong structure. And the real breaking becomes a weak because you don't expect that strong need to get broken, but we expect the weak need to get broken, right? So when you break a weak structure, we start to expect say the pullbacks now facilitate that strong internal the pullback na facilitate that swing structure. We will find our internal structures in it, and the pullback na facilitate the internal structures. We will find our fractal structures in it. When the fractal structures break here, a signal say now the pullback the internal structures facilitate swing pullback pull back. When the internal structures break here, a signal say okay, yes, now swing structure now trading even the pullback nankasa. So we expect say okay the pullback might happening a bit from any moment, and with this structure will form a lower high so that price will continue. Price will continue. Me family breaking the weak structure. Why? Because in the bearish market structure the lows are weak. It will book in him. Let me read this. In the bearish market structure the lows are weak. In a bullish market structure the highs are weak. Swing lows are the lowest point that causes a swing high. Swing high is the highest point that causes a swing low. So here is a swing high, here is a swing low. There is a difference between strong structure, strong and weak structure, and there's a difference between swing structure. So we can have a swing low and swing high, and we can have a strong low and strong high. I wish Zenka you with me because I also have another note I go through on 6th July. This one is really 6th July. Hey, this one is 26th June. Okay, so now note I'm reading is 26th June. You can see say the and also a paragraph. So some paragraphs, all paragraphs are dedicated to BBR 11, right? So if see this paragraph here, maybe I'm in say see when price breaks a structure, we expect a pullback. Here, when price breaks a structure, we expect a pullback. It's a pullback at the end. Uber has said here is strong structures and weak structures. So there's a difference between strong structures and there's a difference between swing structures. Right, so look at how I amend this knowledge in inside together to make sense. So internal structures, when they break, they facilitate this swing pullback. So let's say this is a bearish market structure. When we get a break of structure of this internal structure, it only signifies that this structure nice. It happen like, okay, now we have a swing structure, let's continue the move, and price can then continue the move. So this swing structure facilitates this pullback, the internal pullback. When okay, nice. When we get a bearish market structure like this, we expect the internal or the pullback to be bullish. When we get a bullish market structure like this, we expect the pullback to be bearish. So the internal structures are the kind of structures that is visible to the eye, but it is not significant as swing structures. They are visible, they carry weight, but they are not as much, they don't carry as much weight as the swing structure. Excuse me there. When the strong, so now look at how this is merging the swing structure and the strong structure. When the strong structures of the internal structures breaks, it signals the start and end of the swing pullback. Till the internal structures are the kind of structures that is visible to the eye. They are the kind of structures that is visible to the eye, but it is not significant as swing structures. When the strong structures of, so now let me pause, let me take it one by one before I make this together. So internal structures are structures that are visible to the eye, but they are not significant as swing structures. So now here we can see now this is, you can see yeah, this is a pullback that it is visible. We can see this is a pullback that is visible. Price pulled back, price broke this low. You can see price pulled back to break the high, price continue to break the low before we get this fractal and this low. It is visible. This is visible pullback, but we can't. So let me tell you this. This is a swing pullback. We can consider all of this until we get this structure. We get this strong structure breaks. All of this is a pullback. So now, do we deem this as significant enough pullback? That's a question. Do we deem this to be significant enough of a pullback? Yes or no? Yes. Why? Because again, we have broken an internal structure. From the market structure perspective, we are broken an internal structure to facilitate the swing pullback. This break of internal structure signaled that the swing pullback is happening. The swing pullback is happening. Price continued the move. We came to the lows. Right, we had this move. Yeah, so we'll see say significant enough for pullback, right? You can consider that to be a significant enough for pullback. Yes. When the strong structures of the internal structures breaks, it signals the start or end of the internal break. So here the strong internal structure, but the moment we break this, the rule of the jobs, the roof switch to here. So now the rule will switch say you say hasi now hasi about be strong internal low, na hasi about be you weak, hasi about be you weak internal high. I flip it from bearish to bullish. So here was a strong structure, right? Because it broke this low. Here was a strong structure, but the moment that strong structure and it be breaking, it signals the start or end of the swing pullback. So now when this bearish, for typical example, when this strong bearish structure got broken, it signaled the end of this structure. It signals the start of this pullback here. This we also had an internal structure here, right? So let's say we have this ahasi, we have ahasi. Within this your internal structure, ahasi, your internal structure, ahasi. So let's say you forget it. I forget ahasi ni nyinaa, the ahasi ni nyinaa. I forget we. Let's focus on what is happening here. So let's say we. I want you guys to really get what I'm teaching here, because I don't know, I'm enthusiastic about what is happening and it be me. So I'm teaching it with passion, right? So I want you guys to really pay close attention. Although I'm following the notes, but still there are certain things it is not in the book. It just makes sense to me. So okay, here's the swing structure, here's the swing high. We have this break of structure here, and again I hope that this is where we are going to next. How the names of the significance of this break of structures and these kind of things. But here is a boss. We will say here is a boss. A boss is a break of a structure, a break of structure, boss. So we have a boss here. We have internal structure. We have this is what I mean by the probability and everything that I'm saying. So 1, 2, 3. Let's see 1, 2, 3. The same thing is happening here. The same thing happened here. We have this 2, 3. Now we have 1, 2, 3, 4, the bearish market structure. But I don't know, I really get this, but I know you squad will get this too, because looking at this bullish market structure, we have a break of structure here. We have the lows here. This low broke a structure, assuming that this is a strong structure. So this low broke a structure to flip it to flip from bearish to bullish. The same thing is happening. The same thing happened here. We have a bullish market structure, a bearish market structure. It was broken to form a strong structure, to form a weak high, and then we got this low. So here was a weak high. Here was a strong structure because we broke this structure. Here was a strong structure because we broke this structure. Here is a weak high. So the same thing that is happening, right? So when we get this internal structure, here is the high, here is the low, here is the internal high. So when we get a break of this structure, it signals say after a break of structure, we expect a pullback. So we expect this pullback to around EQ, equilibrium. See. Yeah, no, let me do it well. We expect price to pull back to so we expect price to pull back to EQ to at least see 50% of the range. But how do we know? How do we basically anticipate input? We can use supply and demand, we can use a whole lot of things, but from the market structure perspective, we can wait for structural breaks or breaks of structures. So let's continue. When the fractal strong structure breaks, we get a choke. What is a choke? A choke is spelled like this. This is choke. What is choke? Choke means change of character. So here price is moving bullish, right? Price is moving bullish, and all of a sudden price start drop here, and then you break this structure. You're switching. The character has shifted to bullish. The price is dropping, and then price broke the structure. You're switching. So fractal strong structures. I'm going on a break, right? But I'll do 3 minutes attached to it, so that it will be what do we call it? It will be 50 minutes, right? Yes. So then I'll be back and continue, like 5 minutes break, and I'll back and continue. So I'll read this. When the fractal strong structure breaks, we get a change of character. The fractal weak structure breaks. When the fractal weak structure breaks, we get a fractal continuation of fractal break of structure. When the internal strong structure breaks, we get an an internal break of structure. When the strong swing structure breaks, we get a break of structure. So we have boss, boss, and choke. We have change of character. We have internal break of structure. We have break of structure. So when we get a break of structure, we expect say price pull it back, right? When we get boss, it signals an end of and the start to end of a pullback. When we get it signals the start and end of a pullback. These things, fractal structure signals the end and start of an internal pullback. Internal structure a eyeballs signals the start and end of a swing pullback. After a swing structure breaks, we expect a swing pullback. Okay, so I will end here and go on a break. I'll be back and continue, because the objective is to continue to finish this and finish the one on 6th July as well. Yes, finish the one on 6th July as well. So yes, the 6th July ones also carries weight. It's more dense, so I think that one is deeper. But yeah, we will continue. We will continue.